1099 versus W-2. Would nobody tells blue-collar workers about taxes? Here's the trap a lot of tradespeople and drivers fall into. Someone offers you a 1099 gig instead of a W-2 job. The pay rate looks bigger on paper, you take it, and then April rolls around and you owe the IRS $4,000 or $5,000 you don't have. That's not bad luck. That's a math problem nobody explained to you before you signed on. Let's start with what's actually different between the two. On a W-2 job, your employer withholds federal and state taxes every single paycheck, and they also pay half of your Social Security and Medicare taxes on your behalf. That's 7.65% of your paycheck that quietly disappears from their side, not yours. On a 1099 gig, none of that happens. Nobody withholds a dime until you file. And you're on the hook for both halves of Social Security and Medicare yourself, which comes out to 15.3% right off the top, before federal or state income tax even enters the picture. So when a 1099 rate looks 10 or 15% higher than a comparable W-2 rate, that's not automatically a raise. A lot of the time it's just you covering costs your employer used to quietly absorb. Here's the number that catches people off guard. Say your offer's $30 an hour W-2 or $34 an hour 1099 for the same exact work. That 1099 rate sounds like the obvious win. But once you back out self-employment tax and factor in that you're now covering your own tools, fuel, insurance, and unpaid downtime between jobs, you can end up taking home less than the W-2 offer, while also carrying all the risk if the work dries up for a few weeks. This is general financial education, not personalized tax advice, so run your own specific numbers with a tax professional before you decide anything. But the shape of this math holds true across most trades and driving gigs. The other piece almost nobody explains up front: as a 1099 worker, the IRS expects you to pay estimated taxes 4 times a year, not once at filing time. If you don't, and you end up owing more than $1,000 when you file, you can get hit with an underpayment penalty stacked on top of what you already owe. That's the exact scenario where someone gets a $5,000 tax bill and finds out there's also a penalty riding on top of it in the same week they were already stressed about the number.
And there's a benefits gap that rarely gets talked about either. A W-2 job might come with employer-subsidized health insurance, a 401k match, pay time off, and unemployment coverage if the job ends. A 1099 gig comes with none of that by default. You're pricing all of it yourself or going without. When you're comparing two offers, the real comparison isn't just the hourly rate. It's the hourly rate minus self-employment tax, minus the benefits you'd have to buy on your own, minus the income gaps between jobs that a W-2 role tends to smooth out. So here's what actually works if you're already a 1099 or you're weighing a 1099 offer right now. Rule 1. The day you get paid, move 25 to 30% of that check into a separate savings account you don't touch for anything else. Treat that money like it was never yours to begin with. Rule 2. Pay quarterly estimated taxes on the IRS schedule. That's April, June, September, and January, even if it's a rough estimate based on last year's numbers, because a rough payment on time beats owing everything at once with a penalty stapled to it. Rule 3. Track every business expense in real time. Fuel, tools, a reasonable portion of your phone bill, safety gear, mileage if you're using a personal vehicle for work, because those deductions are the one real advantage you get as a 1099 worker that a W-2 employee doesn't. And most people leave thousands of dollars of legitimate deductions on the table simply because they never kept the receipts. Here's the truth underneath all of this. 1099 work isn't automatically worse than W-2, and it isn't automatically better either. It's a different deal with a different set of math, and the person who actually wins on 1099 is the one who treats it like running a small business. Separate savings, quarterly payments, tracked expenses, priced out benefits, not the one who treats the higher hourly number as free extra money to spend right now. The person who loses is the one who spends the 1099 rate like it's a guaranteed W-2 paycheck and gets blindsided every April. If this helped you see the real difference between the two, subscribe, because we're breaking down one blue-collar money topic like this every single week. Next up, we're looking at a high-yield savings account trick that costs you absolutely nothing and quietly builds a real cushion that most drivers and tradespeople never get around to starting.